Hello there, hi, it's Adil bringing you analysis of the Nasdaq. I'm trying to give you an perspective, basically into market analysis and see exactly what happened with the Nasdaq. So basically, the summary is that we had a flash crash on Friday, and let's try and decipher as to why that was the case. One of the biggest clues in terms of intermarket analysis for the DAX to have a reversal and obviously post a potential flash crash is the German DAX. Okay, the German DAX and the Nasdaq are intertwined. Okay, a bit based on intermarket analysis, and German DAX was obviously into gap fill resistance, as you can see, and obviously the horizontal resistance there held well, and obviously we were due for a retracement or a pullback on the German DAX. Hence the reason why the Nasdaq is going to fall. Okay, so that's one of the prime reasons based on intermarket analysis. Now you can also look at other reasons. I mean, you can look at European markets, for example. Obviously, we can see here we were into trendline resistance, so therefore that would one would presume that the European stock market is going to pull back. Therefore, the Nasdaq is going to pull back. Now, the only conundrum that I can see in everything now is the Shanghai index. Okay. Given the fact that the Shanghai index is a Chinese market and has an inverted head and shoulders, that would then generally put a bullish bias towards the US market. So that's the reason why I shorted the Nasdaq initially around the 36.55 level. I then covered at the 36.20 level. I switched my bias long because I expected the inverted head and shoulders in the Shanghai to lift us higher. And as we all know, we had a flash crash. So yes, I'm still long the Nasdaq again at 35.50 region. I think I was on Friday. I was at 35.45 region. Yes, so I remain long on that and looking for a potential move higher, given the fact that the Shanghai has an inverted head and shoulders formation. So just bear that in mind. Okay. Now the only other thing that you can argue against the inverted head and shoulders in the Shanghai is that the Nikkei has an H&S formation, and the Nikkei held its gap obviously and was on the verge of reversing in the opposite direction. And given the fact that the S&P 500 with regards to the Euro JPY and USD JPY, there's almost 100% correlation recently. Obviously, give and take a few days and divergence, etc. Then that would obviously lead to the conclusion that obviously the Nikkei obviously is under pressure, the yen pairs obviously are under pressure, and given the fact that the correlation is quite strong with regards to the S&P 500 and the yen, then one would assume, and given the fact that the yen and the Nikkei obviously are intertwined, given the fact that the currency moves up and down in the opposite direction, then i.e. the yen goes down, Nikkei higher, yen higher, Nikkei lower. Okay, so given the fact that the yen, obviously given the fact that we had risk off on a Friday towards the afternoon with regards to Nasdaq flash crash, then the yen obviously appreciates, the Nikkei goes lower. Given the fact that Nikkei was already into resistance and gap fill resistance and the right shoulder H&S was in, okay, so that obviously means a powerful reversal in the opposite direction, hence the reason why the Nasdaq had a flash crash. So it's obviously from an intermarket analysis perspective, it's certainly something that we can observe and understand and learn from in terms of the future. So if we see the same type of scenarios occurring again, then obviously we know what the end result will be. Okay, so given the fact that the Nasdaq was lagging as well. Okay, so let's go back in terms of fundamentals. And so fundamentals, the jobs report on Friday was a Goldilocks number. So it wasn't too good, it wasn't too bad, it came just in line. Okay, so based on that, one would assume or presume that the easy monetary policy isn't under threat at all. Okay, especially given the fact that Miss Yellen came out throughout the weekend was very, very dovish. Okay, and obviously she did damage control with regards to the 6 months allusion or reference to the 6 months rate hike, so she had to come out even more dovish than before to neutralize the effects or the bad effects of the previous outing. Okay, so that's basically where we were in terms of fundamentals. So the Goldilocks number came in. One can argue that you could certainly argue the fact that we were going to go higher based on the fact that QE, okay, and it's here to stay. The number isn't anything of any concern. It wasn't much better than expectations, would have led to the argument of tapering coming in, and obviously the stock market would have sold off. So it was in between number. So again, in terms of fundamentals, one can't argue The fact that fundamentals led the market lower, certainly can't argue that at all. With regards to Asian sessions overnight, yes, it was flat. Everybody's waiting for the NFP data with regards to jobs. Okay, so and that's basically what occurred. So fundamentals, I can't justify really a sell-off, but obviously the Nasdaq had other things in mind, and the S&P 500 obviously had other things in mind. So let's go back to our technical chart now, see what our technical setup is. Okay. Okay, so let's have a look at the semiconductors first of all. So semiconductors obviously were higher highs and higher lows. Certainly a bullish trend. I expected a small little pullback if anything, and we already had that for the last 2 days, and obviously then a thrust higher to new highs. That obviously didn't occur. Okay, we had a bearish engulfing candle now on Friday. That doesn't bode well. Certainly doesn't bode well. I do expect a bounce on Monday. A nice little bounce, retracement, and obviously then the thrust lower again. So given the fact that we've sold off quite substantially, I mean from 600 down to 580, it's quite a move on the semiconductors. Okay, so certainly watch out for that. Okay, so let's have a look at a 60-minute chart whilst we're here. 60-minute chart, we're going into gap fill support and obviously a 200 MA support. So therefore, it has the reason why I'm long the Nasdaq, and I'm expecting a nice little bounce here. Okay, going forward, let's have a look at 10-minute chart, see if you can pick up any clues there. Okay, so we just basically have to fill this gap underneath here. Let's just have a look here. So this is basically the gap that we want to fill. There we go. So once that gap is filled, then that should definitely act as support, and we should certainly start to move higher with some velocity. So basically, I mean, you can draw this if you wanted to. Really, it's totally up to yourselves. It's basically how I'm seeing things at the moment. So looking for a potential, say, inverted head and shoulders formation here, provided we can base out here. Even if you do go lower, then you probably base out around there, and then probably push up higher, then reverse right shoulder, bang, off we go to the races. Okay, so that's basically what's going to occur here. Okay, 60-minute chart approaching the 200 MA, and then you've got a daily chart coming up. Okay, and yeah, almost into gap fill. Okay, gap fill support. So that's basically where we find ourselves at the moment. So potential support zone coming up for the semiconductors. That's one of the reasons why I'm long the Nasdaq going into Monday's trading for a potential short squeeze. Okay, so let's have a look at the Nasdaq. Okay, so Nasdaq itself on the daily chart doesn't look good. So it doesn't look good, but I played the potential double bottom bounce. That's what I'm looking for. Potential double bottom. Okay, we went as low as 33, I think, and obviously we've recovered so far. So looking for a potential move higher, consolidation up to say 3600, potential light volume, etc., etc., and then obviously then a thrust down to gap fill. Gap fill 3500 is inevitable, especially with the emotive sell-off that we've had. And as you can see, the Nasdaq is lagging. So you had lower lows, lower highs. Yep, lower low, lower high, and then lower low, lower high, and then obviously down again. So that's basically what we're seeing right now. So potential thrust higher, given the fact that we're going to short squeeze higher, and then we should certainly rally. Okay, so that's basically the situation there on the daily chart. 60-minute chart at the moment, again, like I said, double bottom scenario. We should hold potential double bottom there. Okay, 10-minute chart, really again, double bottom, horizontal support. That's basically where we are at the moment, really, with regards to that, and obviously a potential brewing of an inverted head and shoulders formation as well. So that's something that you need to keep an eye out for with regards to that, obviously going forward. So now that we've looked at the indices and they are into potential support zones and gap fill support, let's have a look at some of the variables that make up the Nasdaq, because they're the ones that will ultimately give us a guide as to what's going to happen. So the first and foremost one is Apple. Okay, Apple is into trendline support on a 60-minute chart. On the daily chart, again, is into support. So we've got this potential wedge-like scenario. Again, we'll see exactly how this plays out. But that's basically the situation that we have here. Okay, so definitely into support for Apple. Okay, so again, that supports the argument that you've got gap fill support, etc., etc. And as you can see on a 10-minute chart there, you've got an inverted head and shoulders brewing. Okay, so inverted head and shoulders. There's your left shoulder. There's your head that's gone in. Potential right shoulder, and obviously reverse to the upside. So that's basically the Apple chart. So let's have a look at Amazon. Amazon approaching gap fill support. Okay, so again, Amazon is approaching gap fill support, and that's on a daily chart. Let's have a look at a 60-minute chart, see if you can find any more clues there. 60-minute chart doesn't look good. Certainly doesn't look good from my perspective. certainly remains vulnerable. Okay, let's have a look at the daily chart. Daily chart, again, I think we've already discussed this with regards to gap fill support. So again, certain into a support zone, and on 10-minute chart already the market's no longer making lower lows, lower highs, and we're looking for a potential inverted head and shoulders pattern here as well. So there's your left shoulder, there's your right shoulder, and bang, off you go to the races. Okay, so very, very important with regards to that. Then you've got the Google chart. Okay, Google chart on the daily chart doesn't look good, as you can see, in a head and shoulders formation. That's definitely not a healthy sign going forward. But for now, 10-minute chart still remains bearish. You can't really go bullish on that at present. 60-minute chart looks very ugly, but again is into horizontal support. So again, that's another reason why I wanted to go and obviously along the Nasdaq, because we do have a lot of variables that are coming into support. Okay, and Twitter as well. HNS formation ever since it triggered, obviously it's been going down. Daily chart at the moment, even though we haven't got much data, to be honest with you, with regards to a daily chart. Again, the reason why I went long the Nasdaq again was a double bottom, so that's what I was playing on Friday, the potential double bottom, looking for a short squeeze come Monday. That's basically my observation there. So all the variables are obviously into support with regards to that, and then obviously we've got the likes of Nasdaq and the semiconductors both into support as well. Now I can get this confirmed by looking at the chart, the S&P 500, and as you can see, the S&P 500 is now in 60-minute chart is approaching gap fill support and is into 200 MA support as well. So again, that's sufficient enough for me to say, okay, we are going to expect a potential bounce going higher from here. Okay, so keep an eye out for that as well, folks. Okay, that's something that we will certainly be observing. Well, with regards to the daily chart, as you can see, classic or fake out, made a new high, then obviously the market reverses in the opposite direction. Okay, so also remember the ban on Twitter has been lifted in Turkey. Turks, they actually put a ban on Twitter, and obviously that led to the social media sell-off and the hype bubble being burst, adding the fact that Miss Yellen obviously slipped the 6 months tapering, etc., etc. So, but then having said that, she's done damage control. So, and all the Fed members that have come out thereafter have been quite dovish, regardless. So, and the dollar itself has been, it has been under a considerable pressure prior to NFP, obviously. Even after NFP, it came under pressure as well. So you've got the for pairs such as Aussie, USD, and Kiwi dollar all remaining afloat and remaining strong. The euro obviously has been under pressure, so that's the reason why you're seeing the divergence between the European markets and the US markets, because Europe you're going to get QE and America QE is coming to an end. So there could potentially be, even the Nasdaq itself could just be rotation out of tech potentially into European stocks. So where the next batch of Kool-Aid, or the next serving of Kool-Aid, is going to be unleashed onto the market. So the QE junkies can certainly unite and rejoice. Okay, so again, just a little observation from into market analysis perspective, the Nasdaq, and how I expect a potential bounce there going into next week. Okay, so last week was a good week. Although I did exceed 200 points at one time, I ended up back at 185 points for the week. On the live analysis service, fundamentals analysis service, I think wasn't spectacular. It was decent enough, but not spectacular as normal. I think I'm just to manage over 100 points in that. There wasn't many movements. I remained long cable on that, by the way. Swing long cable, although it is against me at present. I think I'm down about 50-60 points, but nevertheless, that trade remains active, and so far so good. It's been a good week last week. Let's hope for another good week this week. I'm going to do a video on the FTSE shortly, and hopefully you can tune into that as well. So risk on, risk off, wax on, wax off. Goodbye now.